Any indication, I know you've been mildly optimistic about the European economy, any indication that our trade fight with China here is having kind of a negative impact on the 19 or so $1 trillion EU economy?
Well, absolutely not from these GDP prints. So if you look at the GDP breakdown, actually they revised up the Q4 consumer spending and investment data, very strong investment data from the Eurozone in Q4 of last year. And then we had another very strong quarter for investment in Q1. To put this in context, investment for the Eurozone rose 4% annualized in Q1, 6% now annualized on the revised data in Q4, and consumer spending is annualizing at 2%. We also had some pretty strong employment data again, and yesterday there was confirmation that wage inflation in Germany is running at the highest level since EMU commenced back in '99, and we now have some regions in Germany where the unemployment rate on a US-style definition is now below 2%. So, this is not the narrative that you're hearing from a lot of other commentators, and it's, again, highlights to us that at Jefferies we're living in slightly a parallel universe to a lot of other people. We actually think Europe at the moment is doing okay. It could do better, but the Eurozone certainly is doing better than people expect. And the other thing I would highlight is, unless Donald Trump turns much more of his attention to Europe, the EU itself can actually benefit from trade diversion from China and the US to more trade with the EU and China, and also from the EU and into the US itself. Now, the EU is the biggest trading bloc globally. It's running a big trade surplus with China, and it exports pretty much the same products into China that the US does. So actually, depending on what happens to global trade, the EU may benefit to some degree from trade diversion, everything that's going on the trade front with Donald Trump and China in particular.
Yeah, but I do wonder a little bit, David, if the number is a bit misleading, because just like our states here, some are big, some are small, the 28 EU nations, some are big, some are small. And when you dive into the numbers, you look at the strongest economies, Bulgaria, Latvia, and Poland, which has the strongest economy year over year in all the EU. Is that enough to help the combined economy? Or is this really all about Germany and France?
No, I mean, Germany is still doing pretty well. If you've got wage inflation running at over 3% in Germany, how can that economy be in recession? You've got unemployment in Germany at 3.2%. I haven't had a chance, obviously I'm sitting in your studio, to look at the breakdown of German GDP, any more clarity on that. But basically, we know from what was released a few days ago that German household disposable income was very, very punchy in the first quarter. So it's not purely about the periphery and the smaller countries just outside the Eurozone, or some of the very large ones like Poland, I should add. But the point here is that, even in the core, things are doing better. And this is a domestic recovery. This is not a large cap quoted sector recovery. This is a domestic recovery based around service sector. So a lot of equity investors, I think, are missing it because they're looking at large cap German companies in some cases, but the action is at the small cap level, and it's within the service arena that we're seeing the action. And this isn't at the quoted level at all.